Module 2, your contract and how you get paid. Before you manage a project activity, learn how your own firm earns and collects money. The signed contract is not a document to file after mobilization. It is your payment operating manual. Start by finding 8 things: scope, deliverables, payment schedule, contract type, fee rates or milestones, reimbursable categories and ceilings, required supporting documents, and the approval and payment route. Also note the currency, tax treatment, retention or holdback, advance terms, and rules for changing the contract. Put these items on one payment checklist. The most common contract structures are lump sum, time-based, and a hybrid of the two. Under a lump sum arrangement, payment is usually tied to defined outputs or milestones. The essential evidence is normally acceptance of the relevant deliverable or milestone, but read the contract carefully. It may also require reports, invoices, or other supporting records. Your financial risk is delivery effort. If the work takes more resources than you priced, the contract does not automatically increase. Under a time-based arrangement, the claim is usually built from time actually worked at agreed rates and eligible reimbursable expenses, up to the contractual ceiling. The essential evidence may include approved timesheets, travel or expense records, and the required invoice format. Your risk is utilization and authority. Days beyond the agreed level of effort, scope, or ceiling may not be payable without a formal change. A hybrid contract combines these logics. Do not use one bundle of evidence for all components. Build each part of the claim against the payment rule that applies to it, and ensure the same work or cost is not charged twice. Now make the difference between budgeted, earned, billed, certified, and paid visible. A budget is not automatically revenue. Work becomes earned only when it meets the contract's payment condition. A valid claim becomes billed when you submit it. Certification or verification may unlock payment, but it is not cash. Payment is cash received and reconciled in your records. That sequence matters when a client asks for something extra. A verbal request, a helpful email, or a technical meeting does not necessarily authorize additional fee or expense. If the request changes the scope, effort, price, or schedule, quantify it and follow the contract's change process before committing the extra work. Get the correct approval in writing. Use a claim backwards method. Start with the payment condition, then list the evidence needed to prove it. Then collect that evidence as work happens. For a time-based claim, do not wait until invoice week to discover that timesheets were never approved. For a milestone claim, do not wait until the end to learn who must formally accept the deliverable. Checkpoint, take the next payment you expect to claim. Can you name its payment condition, the approving person, every attachment required, and the remaining budget or ceiling? If any answer is unclear, resolve it now. Your action is to make a one-page contract payment summary and share it with the team leader, technical leads, and finance focal point. People cannot protect a payment condition they do not know. Next, we look beyond the contract to the rules and documents that can affect whether a cost is eligible and defensible.